Okay, so good evening. It's Francis Obasogie here from Generational Wealth Academy, and we are going to be looking at an introduction to swing trading today. Swing trading is a very popular trading strategy, which is used by, Forex traders, but traders generally, Forex traders, stock traders, and, all kinds of assets could be used when it comes to swing trading. There are different techniques which people do apply when it comes to this particular form of trading, and we're going to be looking at what I would consider one of the easy techniques or strategies for trading swing for applying or entering a swing trading a swing trade, as it were. Let me just bring up a screenshot of some of the things we're going to be looking at today. I've also got it out here in text format. So I'll just share that with you, just 1 minute. Okay, so the question is, what is swing trading? Now, according to one of the popular trading websites out there, well, actually, this is from Wikipedia. According to Wikipedia, it says swing trading is a speculative trading strategy in financial markets where a tradable asset is held for between 1 to several days in an effort to profit from price changes or swings. A swing trading position is typically held longer than a day trading position. I mean, obviously, what that is saying in a nutshell is that, swing trading is different from scalping, which obviously happens within the hour, happen in a couple of minutes, sometimes within the hour, or it could even drag into hours, like we have noticed, if you're part of my trading community, but typically, scalping and day trading usually are trades you open and close, within a trading session, a market session. So if it is the case that you are trading the European session or the US session, you would open up a trade and close it, within a number of hours, not taking it, into the next day, or perhaps not even into the next session. So that's the difference between swing trading and day trading. And like I say, like it says here, it's held is a position you hold, typically anywhere between 1 day and several days. So let's just, we'll be going to our chart soon. Obviously, we want to find out how to identify, a trend, because the thing is about swing trading, you are looking, to enter or to take a position when there is a trend or when a trend is about to happen, so you could put your place order, you could place your order, put your order in place, as it were. But let's find out, by going to the chart to see how we can actually identify a trend. The worst thing that could happen is to be stuck in consolidation, when in actual fact you are wanting to capture, some pips, even by entering the trend. So let's go back to our chart. And if you don't mind, pick a pair for us to look at. I don't want to, obviously, the chart I showed you earlier on is one that I have open, one that I've been looking at, but I want you to, we don't want to cherry pick here. I don't want to cherry pick. So I want you to, call out a pair, not Euro USD, call out any other pair. Sorry, not USD JPY, because I am currently in that trade, and we don't want lines, we want a clean slate, as it were. So if you could call out a pair that we could go to, and we would have a look at that. If you could call out a pair or type in the chat box any pair, so we could look at something fresh, something clean coming from you. Okay, pound JPY, that's GBP JPY. Let's look for that. There we go. Okay. Okay, Crypto Millionaire says it's on a downtrend currently. Okay, let's have a look at that on the daily. Right, yo. Right. Okay. I mean, I suppose you could say it's on a daily. It's on a downtrend. Let's just consider that carefully. Okay. I wouldn't. Okay. I'll tell you what. I mean, I would bring out my moving average. Obviously as a way of also identifying or confirming, whether a pair or an asset is an uptrend or a downtrend. But I mean, as I can see here, just by looking at that, it's not exactly in a downtrend. Let me just tell you what I mean. I mean, from here, for instance, looking at my trend line, as a matter of fact, if you want to pick it up from here, you will see it is actually, well, it is actually in an uptrend, because it's going from the bottom here all the way up, making higher highs, higher lows, and so forth. So it's been in an uptrend. Perhaps it's going to, well, okay, fine. You could say perhaps it's reversing. Who knows? In the next couple of days, it might go in a downtrend. But for it to, for that to be, for you to actually figure out or ascertain whether a particular trend has changed, it would have to break some structure. And in that case, if you consider, let's zoom out a bit more. Obviously from here, coming down, it was in a downtrend, but it did bottom somewhere around here. It bottomed somewhere around here, and obviously it started, picking up. Well, okay, we cannot actually, zoom out further than this. But like I said, looking at this, it is an uptrend until it breaks structure, which could be somewhere you could consider this a high, a low, a high, a low. Yes, I mean, for you to determine if something is in a trend, you need to have a higher high, two higher highs, and two higher lows. So if it's going up like this, you have a low, a high, a low, high, low. So you would say from here, there was a definite change in the trend. So all the way from the top here down, going down, it was a downtrend. But then when it got to this bottom, which was a low, made a higher high, a low, a higher high, or perhaps this one, depending on what you want to consider a higher high, until you get two higher highs and two higher lows. In this case, you would not, in a sense, say there is a change of structure. Anyway, let's carry on. I would still consider this an uptrend until it breaks this low. Until it breaks this low, until it comes down and breaks this low, I will still consider it, you know, an uptrend. Or perhaps it is going into, who knows? It might be going into a range. Anyhow, let's carry on. So to take a swing position, to enter a swing position, you want to identify whether it's in an uptrend or downtrend. And obviously, you know, once you've ascertained which one it is, you basically, you know, would take a position, you know, then. But looking at this pair now, we are on the daily time frame. And unless you have a big account, a big trading account, I would say perhaps you want to mark up your chart on the 4 hour. You want to mark up your chart on the 4 hour time frame, and then enter your position on the 1 hour or so. So typically the way you would approach swing trading is to pick a time frame, a high time frame, and then enter your trade on a lower time frame. Like as I believe I said earlier on, there are various strategies for entering, taking a position. I'm going to be looking at one which I consider quite simple and straightforward today. I had planned on perhaps using the Fibonacci, but I thought to myself, you know, that might make things a bit more complex for some, you know, because some other, you know, trading community that I belong to, most of them who are based in America, they are in church now, so obviously they can't join us. Maybe they'll join us later, but they are going to be watching the video. And I thought to myself, because they are still relatively new, if I start, you know, with using the Fibonacci as entry, it might make things a bit complex. So we'll start with the smaller, with a simpler entry technique, entry and exit technique. So let's start marking up the chart on the 4 hour time frame. I suppose you could still consider this, an uptrend. Now, to make things easier, we don't have to start at this bit here. We could just go back in time. We could actually, you know, look to start from somewhere around here. Let's draw a trend line. Now, for your trend line to be valid, you basically want it to touch two positions. You want it to touch two positions. You want it to touch two positions. So you can see what we've done here now is actually touching this bit, this low, and this one. You could do this, you know, but then obviously there'll be bits sticking out. I mean, that obviously there's a way to trade that as well, but I would say let's go with this. You know what? Let's go with that. Let's see what it looks like on the. Okay, let's go back to the 4 hour. So we're going to be marking up our chart here, and then, you know, choosing to enter on the 1 hour time frame. This is the 4 hour. Let's go to the 1 hour now. Because what you typically want to do, as it is the case that is an uptrend here, you don't want to go against the trend, as it were. You basically want to go with the trend. Like they say, the trend is your friend. So the way this is going to work is you have a swing low here, a swing high, swing low, swing high, swing low, and so forth. So if you're going to go with the trend, you want a situation whereby whenever the price, or the candles come and touch the trend line, you'll be looking to enter the trade, to get a swing. And typically, when you are swing trading, you are looking to go just in a particular direction. In this case, you're looking to buy, which means you'll be looking for a swing high. From a swing low, you'll be looking for a swing high. Now, once if somebody is experienced enough, they could actually, trade it back down. But that tends to be a bit more risky. What others would do is take a position, a swing trading position, obviously in this case going up, but then decide to scalp coming, the other way, or taking a counter trend, just scalping purposes only, whereby you stay in front of the computer to actually monitor the trade. But in this case, we're looking at it coming to hit the trend line, and you'll pick it up from there. Now, how would I enter this trade? I mean, being that we've seen that this is a swing low, and like I said earlier on, we do consider something to be a trend when we've had a series of at least 2 highs and 2 lows. So in this case, we have a low here. Let's just see if we can mark this up. Do bear with me. I'm trying to, I might not come back to you on the chat just quickly. I know some of you are typing stuff in the chat, but I might not be able to respond to that just yet. So I can actually get this, done first. Let's just number up. Okay, I mean, that might take some time. Let's just leave that. So this is the bottom, the low, the high, the low, the higher, that's a higher low now. Or if you want to choose this bit, the higher low and the higher high. So in this case, you would have a high, a second high, a low, a second low. So basically, you would wait for it to come back and touch this bit. So you'll be looking to enter the trade somewhere around here. Let's just put our line there. Since we're on the 4-hour time frame, we then go to the 1-hour time frame and look for a place in which to enter the trade. Let's just go back there and put a horizontal line there as well. So we are doing it a bit more precisely. So that's the point at which it touched the, let's make that green or lime. Actually, let's make it yellow so it stands out. Okay, so we're on the 4-hour time frame. We marked it up, vaguely. Let's now go to the 1-hour time frame and find that bit where we put the line. Okay, so that's where the line is. We'll be looking to enter the trade anywhere along this bit. Let's just see how many pips we have from here. For instance, this is the low, the low. We have over 260 pips there. If we go this high, we have about 330 pips here. So what you'll be looking to do is to use this as your support, to use this bit as a support. Now you want to look for a period, a point in time where there is consolidation in in the market, a period when there was consolidation in the market. I mean, for me, I would say I would use 4 candles. There was one here. So at the point we marked a while ago on the 4-hour time frame, the price went up and down, and it came to this point. Since we're wanting to trade up, we'll be looking for a period of consolidation where we could pick up the trade going up. And here is where I would say there was some kind of consolidation. I would then, put that in a box just to have it as a marker. I go there and choose my shapes, choose a rectangle. So I basically, put a marker there, a time when there was a period of consolidation, and then look for a break. This is where we had a break. So there was a box there, period of consolidation, and there was a break. I would choose to enter the market or the trade, as it were, just here. So let's mark that point. Let's mark it in green, indicating the point at which we entered. So when that candle closes, you can see the candle actually went higher than the other candles ever did. So we'll enter here. Let me just increase the size a bit slightly. The size of the candles, that is. So we'll enter here, and we will put our stop loss. We'll place our stop loss below the box or outside the box, or perhaps just on the line of the box. So if that is where we entered, we could place our stop loss just under, which basically means we are having a stop loss from here to here, which is 70 pip stop loss. Now, some might not want to do that, but obviously it depends on the trader or the person in question and what they are willing to risk. The reason why I have placed the entry here is basically because it's a breakout. It's a breakout. It was ranging all this time. It broke out. Some might decide to place it somewhere here in the middle, halfway in the box. Some might even decide to place it at the low. But I think it's actually safest to place it here because there has been a definitive breakout. There was a breakout here, obviously it came back in, which obviously means it was a fake out. Then it began to go back and forth. There was a breakout seemingly here, but it turned out to be a fake out as well. It closed back in the box until it definitively closed here. So I will place my order here for the trade, that is going to go up. Now, we'll place the stop loss here. Let me mark it in red. If you consider the fact that from here, the price went up and it came back down, which means you had a drawdown of about 100 pips. But definitely, you do not want to have a drawdown of 100 pips. What you would want to do is to basically place your stop loss. In this case, if you enter anywhere at this point, to play it safe, depending on the size of your account, because if you entered here and you place that as stop loss, that would be 79 pips. But if you enter here, okay, sorry about that. I mean, if you entered here and it went up and came back down, it means there was a drawdown of about 44 pips, which is fine. 44 pips, 50, pips or so Yes, maybe a maximum of 70 for some people. I mean, I would usually go for a maximum of 70 pips, you know, but a 44 pip drawdown or 42 pip drawdown is good enough. But then it began to go up. And you can see here, this was indeed, let me just zoom out. So from here, where we entered the trade all the way to the top here was about 216 pips. Now that is huge. And I can tell, I'm going to be putting the day separators or the period separators soon. So you see over the number of days, you know, which this trade lasted. But I can see here, it lasted about 2 days or so. To get 216 pips in 2 days definitely is good. Now, when you trade like this, at some point, you might want to, you know, place your, you might want to trail the trade. You want to trail it. So if you entered here, there are a number of ways in which you can actually determine how many pips you want to go for, what your target is. You know, a risk reward of 3 to 1, well, a risk reward of 1 to 3, rather, 1 to 3 is usually very good. However, if you're just starting off, you could decide to target a risk reward of 1 to 2, which basically means, even as we did say we're going to enter the trade here and have our stop loss here, which is like 70 pips, it means you'll be willing to risk 70 pips, but looking to gain 210 pips, which is times 3. And you can see it is bang on. It is spot on here, even more. At least we got our 210 pips. So we can see that the market is indeed very organized. I mean, if you were to look at the chart sometimes, it seems disorganized. It seems unsystematic. But obviously, after a number of years of trading, and because there are lots of traders out there who have learned certain strategies and certain ways to enter, okay, it's clear that the market is not disorganized. Now, okay, I mean, Joe says I am breaking up. I don't know if Alison can confirm that. Am I breaking up or am I coming out clear, Alison? Okay, I mean, you know, the crypto millionaire says it's loud and clear. So, Joe, you might want to check your network. You might want to check your network. Hopefully, you know, whatever you miss here, you will pick up in the recording. Right. So basically, you know, going for a risk reward of 1 to 3, we can see we actually did hit the mark. So if you entered here, you can actually, you know, go all the way there and, you know, easily claim your 1 to 3. But even if you wanted, you were going for a target of 1 to 2, a ratio of risk reward of 1 to 2, it means you would have come out somewhere here with 140 pips. With 140 pips. Now, some people would actually even be okay with 70 pips, which means 1 to 1. But I would advise you target at least, you target a risk reward of at least 1 to 2. That is what's going to make the whole thing about swing trading worthwhile. The beauty about swing trading is that it helps you carry on your day job. If you've got a day job, you can actually do that and do your day job. If you don't want to become a screen slave as well, because we know trading could be very addictive. Once you spend some time in front of the computer, you might plan to spend 1 hour. Before you know it, you're spending 2, 3, 4 hours there. You know, so if you want to obviously avoid all that, if you don't have the time, you could decide to become a swing trader. Okay, let me see. I think somebody has just joined us, or is it you want to mute yourself? Somebody has just joined us. Just 1 minute. Oh, okay. Brenda has just joined. Hello, Brenda. I'm gonna. Well, you're muted, so we're all gonna stay muted for now while I carry on. The teaching. We've looked at a couple of things, but obviously I'm recording this. You can pick it up from later on and share it with your team as well. Okay, so I suppose that's that. So what we've looked at now so far, let me just now go back to the list of things we intend to cover today. Let me just go back to the text. So we have looked at swing trading, what swing trading is. We've looked at how to identify the trend. Okay, I will go back and clarify what the difference between a major trend and a minor trend is. We've also looked at how and when to enter the trade. But obviously we have considered we didn't quite. There are various ways in which to do that, to enter the trade. One of the ways is looking at support and resistance. Because we were not quite close to support there, we didn't apply that strategy. We didn't use engulfing candles. Neither did we use pin bar. What we basically used a while ago was what you might want to call order block. That was the strategy we used, a while ago. If you were to check the internet for the order block strategy, you will see that people trade it in various ways. Some people call it order blocks, order block. Others call it trading in the box or something like that. So there are various names, which, we will not even begin to go into. But anyway, that's one of the strategies for entering the trade. What else do we've also just looked at when to take profit or how to take profit, using a risk reward of 1 to 3. Using a risk reward of 1 to 3. That basically means if you have a stop loss of 50, your take profit would be 150. So if you have a stop loss of 50 pips, you would go for a take profit of 150 pips. And that is quite easily achieved even with swing trading. It's quite easily achieved with swing trading. One of the ways, obviously, to also figure out where or how to take profit is by using the Fibonacci. Okay, I suppose we will briefly look at that now. The crypto millionaire is insisting, and when the crypto millionaire speaks, we have to listen. So we'll just quickly look at that. We won't be going into details. We would not, however, be going into details with that. We'll just be looking at how to take profit using Fibonacci. But obviously, you can also use Fibonacci for determining how to enter the trade. If we really want to do this properly, this training session, it's something that might sorry, just a minute, let me do this. Let me get this right. Okay. Okay, so let's now look at how to take profit using Fibonacci, if it's going to be applicable here. I'll go back to my screen even now. Go back to my MT4, that is. Okay. Let me just so we can see where we entered the trade. We entered the trade even at this point, this green line. Let me just quickly annotate that. Let me choose a color that is going to stand out. Okay, so basically this was our entry. So if we're looking to use the Fibonacci to determine where to take profit, what we would do is consider the swing high. We will consider the swing high. So in that case, we will pick up our Fibonacci tool and we'll use this swing high. This was the last swing high in a sense. I know someone could say maybe this is was a swing high as well, but I will go for this one. We'll take it to the very bottom. So in that case, you could decide to come out here at the 61.8, mark. It's not showing very clearly here because obviously, the candles are in the way. Let me try and zoom out. Let me just make it. Okay, let me do it differently, just 1 minute. Let's do it differently. Okay, well, I mean, yes, even like, Alison is saying, 61.8 can actually be take profit 1. Let's see how much pips that is. That's 90. That's about 90 pips. Okay, I mean, I won't say that would not be take profit 1 in a sense because if it is 70%, 70 pips you are having as a stop loss, I would say if anything you might want to make take profit 1 an equal amount of pips. So going by that, let's go for 70 pips, for instance. You could make take profit 1 a bit less than 70 pips. As a matter of fact, you could go for, the 50% point and collect 60 pips. Once you get a 60 pips, you could take profit, or you could decide to make that take profit 1. But obviously, it depends on you in a sense. It depends on where you are willing to take, where you are wanting to take profit. But yes, you could. I suppose you could make that, take profit 1, and then make the 100%, mark, take profit 2. But obviously we know it did go further than that. But once you get, a 1 to 2 reward, that is good. But if you can get 1 to 3, that is even better. So what we could also do, like I said a while ago, even though we've used that as the high point, let's, choose a different swing high and see what we get. You know, let's pick it up from here, for instance. Well, obviously, that would be a lot less. That would be a lot less, you know, pips will be collecting if we were to do that. But like I say, this is the best place to actually, you know, pick it up from. So that's how to take profit, how to determine where to take profit. And I suppose we would leave that for, you know, for today, you know, so that you could all spend some nice time with your family. We could go into it, you know, more in depth next time. I mean, if you have any questions now, I mean, you could feel free to ask so that we could round this up. I'll give you some minutes since I know you're going to be typing. You could basically, you know, type your questions, and I'll see if I can answer them within the short time we have even now. You know, like I said, there are various strategies for, you know, determining when and how to enter the trade, but the whole idea is that you capture a swing, you know, from one point, you know, in this case, because it's trending up, you want to capture it from the bottom as low as possible to the top. And that's exactly what we did here. Picked it up from here and would have taken profit either there or somewhere before then. Like I said a while ago, you could actually also, having gotten some pips, decide to trail, you know, use a trailing stop of, say, about, I don't know, 20 pips, whatever you're comfortable with. You know, for instance, this candle, you know, it's about, well, 40 pips. Okay, perhaps you don't want to, let me see what number of pips, that's about 30 pips. Depending on what you are comfortable with anyway, you could decide to trail it and choose whatever number of pips you are willing to give back to the market, if anything. Now, there's a question there. It says, when you set a swing trade, what factors apart from the news may make you exit the trade? Okay, well, the thing is, you know, you do want to, obviously, if there is going to be news, it can adversely affect your trade, you know, but you are, you know, in a sense, hoping that whatever news there is will not affect your trade negatively, you know, because you find that, you know, with the news, there are times when it does actually push the price in the desired direction. So you are hoping, if anything, the news will push you in a desired direction. But because you have set a stop loss anyway, you know, it means you are willing to risk that number of pips. So even if you were here, and there was some news, and it came and the price, you know, reversed and turned against you, the market turned against you, you would have been stopped out at about 70 pips or so. But I'm sure you do know, very good question, I must say, very good question. I'm sure you do know that once you've entered the trade here and it has moved up, you know, to some extent, or moved up a bit, you want to begin to now trail the profit. You want to begin to, as it were, adjust your stop loss, whereby if it was here, you want to now begin to move it up slightly here, and then move it to break even. And then as the price goes up a bit more, you keep on moving your stop loss. So that even if, you know, you now have your, by the time you move your stop loss and it's at this point, for instance, if it is the case that the price which was here now goes against you, it will stop you out here. It will stop you out there, which means you would have still secured about 67 pips. You know, what you are hoping is that if there's going to be any news, it happens after you've secured some profits, whereby you are now trading risk-free. But the question says, when you set a swing trade, or I suppose you mean when you enter a swing trade, what factors apart from the news may make you exit the trade? Okay, well, I mean, unless there is for some reason, maybe some pattern you see, you feel that the trade is going to reverse. For instance, when we entered the trade here, let me just move this away now. When we enter, if you enter the trade here, for instance, and the price began to go up, we can see how far it went. Now, with this massive engulfing candle, if you were still in the trade, assuming you didn't set a stop loss, well, assuming your stop loss was maybe somewhere here, at the close of this massive candle, this massive engulfing candle, I would say, if you notice that, you should have come out on your own. So that would make you exit the trade, when you see this massive engulfing candle. Now the thing is, even though we decided 1 to 3 risk reward is good, there are times when by the time the trade is finally over, or by the time you finally close the trade or you are stopped out, it might have even moved to a risk reward of about 1 to 4, 1 to 5, or like I was looking at a chart, some video earlier on, and I saw that the risk reward was actually 1 to 7, which means for every stop loss, they put in place, they were going to make about 7 times, that much number of pips. So if we enter the trade here and the price had continuously kept on moving up, you are not going to say because it got to that 1.3 ratio, that is 210 pips, you're going to come out. No, you are basically going to let the trade run. So if the trade is going to carry on up, let it keep on going. You have just targeted 1 to 3 pips, 1 to 3, placed a target of 1 to 3 risk reward. But if it's going to run, keep running, let it run until perhaps you anticipate the news which is forthcoming is going to affect your trade negatively, or you see such a bearish engulfing candle, then obviously you will know, maybe I need to come out of this trade. But think of it, even if you had your stop loss here, and we experienced this bearish move in the market, you would have been stopped out here. Now, even if your stop loss was here, it meant that with this bullish engulfing candle, the price would have carried on going down, but then would have then reversed. But you don't really want to be caught up in this. You don't really want to be caught up in this point whereby it's almost as though it's a waste of your time. What you've taken, you spent, done some good analysis and entered the trade. The price has gone that high, only for it to come back this low. So, which means you'll be giving up about 80 pips or 85 pips to the market if it stopped there. If it came this low, there'll be a drawdown of 150. You really don't want that. So if you anticipate the news is going to come against your trade, you could come out. Or if there's a bearish candle like this, you come out. Anyway, any more question? One more question, if there's any, and we would call it a night. But obviously, for those of you in my trading group, my trading community, you feel free to ask clarifying, questions or questions that would seek clarification so that we can actually then look into them a bit more. So if there are any more questions, let us have them, and we would call it a night if no more questions.